and welcome to the Al-Attiyah Foundation's podcast series. This is where experts share their insights on current and urgent energy matters for the benefit of our members and indeed for the wider community. My name is Etna Trainer, and I'm joined today by Dr. Bassam Fattouh. He is the director of the Oxford Institute for Energy. Bassam, I'm delighted to welcome you. Thanks so much for joining us.
Thank you for having me. It's really a great pleasure.
Now, we've so much to talk about, but when we look at, your work as the director of the Oxford Institute for Energy, you specialize in the oil markets, the energy transition, economies of oil exporting countries. There's so much going on at the moment. So let's just talk about the markets and global oil demand. Has it recovered to, pre-pandemic levels at this point, or where? Give us a situation, or so to speak.
Sure. I think that one of the main features of the COVID-19 shock on oil markets has been its uneven impact on global oil demand. And this has been manifested in a number of ways. COVID-19 shock has hit certain countries and regions harder than others. It has hit certain fuels, such as jet fuel, harder than other fuels. It has also hit certain economic activities and sectors harder than others. For instance, think of the impact that COVID-19 had on tourism and retail, or the airline sector. And this is also having an impact on the recovery on demand, which is highly unsynchronized across regions. For instance, China has witnessed relatively strong recovery and has been doing quite well. The recovery in the US has been quite choppy, but the recent data have been very encouraging, as the rollout of the vaccine has been successful. In contrast, Europe recovery is still lagging, but prospects have been improving as the vaccine rollout gathers momentum. In India, the recovery has taken a setback with the recent rise in the virus cases, and India's oil demand is expected to take a big hit in April and May. And this weakness could extend to the rest of the year if the spread of the virus is not controlled quickly. And the recovery in oil demand is also highly unsynchronized across fuel, with massive impact on the refining sector and products. For instance, jet fuel has been hit the most, but recovering very slowly on the back of local travel in China and the US. But overall, refining margins remain weak despite the cut in runs. I think the rationalization of refining capacity is inevitable, and this could cause a massive shift in product trade flows. So just in short, this highly unsynchronized recovery means that it will take longer to get back to the pre-virus level. Our projections suggest that this would take place in the second half of 2022.
Indeed, impact, I think, around the world. And as you say, that, very scattered recovery and the uncertainty that's out there, it still is a big issue. But when we look at, the longer term impacts, where do you think this is going to be? Has it really changed the dynamics, or will we come back to, I suppose, that sense of normal at all?
Well, this is quite a difficult question, because it's linked in a way to the peak oil demand in a way, and the projections of oil demand are highly sensitive to the underlying assumptions, such as economic and population growth, transformations in the transport sector, carbon taxes, and any changes in these assumptions could result in pushing backward or forward the date of the peak by years. Also, all projections assume that there is a global single and unique peak, after which demand tends to fall sharply. And I would argue that both of these are questionable. There may be more than one peak, and even after we reach a peak, oil demand may plateau or decline slowly. And there's also much debate on whether COVID-19 may have accelerated the peak in oil demand. At the moment, analysts who are making projections of an imminent peak assume that the current forced changes on consumer behavior under the lockdowns will persist even when economies open up, and that people's behavior will only go in one direction, and that is away from consuming petroleum products. But I would argue that the reality is more complex. Just as an example, there's a strong belief that oil consumption related to mobility and car ownership will fall sharply because more people will decide to work from home. But the pandemic could induce a drop in the use of public transport, and preference for more private passenger vehicles. I think a key factor will be government policy. All the stimulus packages announced aim to be directed towards projects that move us closer to a net zero emissions. And if implemented effectively, this could have a long-term impact on demand. So I would say that the jury is still out there. But at the same time, regardless of one's views on peak oil demand, perceptions about the prospects of oil demand has shifted, and this is already affecting players' behavior and is already shaping the industry's key decisions. For instance, it has affected investors' risk preference. It has affected IOCs and oil exporting countries' strategies. Also, perceptions have shifted from scarcity of oil resources to abundance of resources. But I think the change in perceptions and aspiration is occurring much faster than what could potentially be achieved on the ground in terms of a fundamental changes in the energy mix.
And now when we look at, the state of the pandemic globally, do you think actually that COVID-19 is accelerating the pace of the energy transition? Very much the theme of all of this series, we're talking about that energy transition. We talked about peak oil demand there, but in terms of, what is the damage, I suppose, or what is the impact of COVID-19 in terms of accelerating the pace of the energy transition?
As I mentioned in my previous answer, is that the jury is still out there, and I gave the example, for instance, on the belief that oil consumption related to mobility and car ownership will fall sharply because basically people are working from home. But we're also, seeing a sharp reduction in the use of public transport and preference for more private passenger vehicles. Another example, for instance, there might be change in people's purchasing habits through digital platforms, but the reductions in shopping trips could be offset by higher delivery truck miles. I think the key, as I mentioned before, I think the key factor is really government policy. All the stimulus packages are aiming towards reaching net zero emissions, and if implemented effectively, this could have a long-term impact on demand. But we cannot really assume that all the stimulus packages are going to be successful in delivering this greener recovery.
Yes. Now, earlier there you mentioned that there is a mismatch between the expectations and aspirations on one hand, and what can be achieved on the ground in terms of changing, the energy mix. And again, looking at more, down the road implications on that. What do you think?
Well, just as I mentioned, one of the major changes is the shift in perceptions of scarcity to abundance of resources, and that includes oil and gas. And this shift is justified in a way because resources are plentiful and advances in technology would allow the industry to unlock more resources. However, a precondition for abundance is that we continue to invest in the oil and gas sector. And at the moment, at least, there's a clear evidence that the current shock has resulted in massive reduction in capex budgets. The shift in perceptions has also shifted investors' risk preference and their general attitude towards the hydrocarbon sector. And this could in turn affect the availability and the cost of finance. We are also seeing many international companies shifting their portfolios away from upstream oil and exploration. So if this underinvestment persists, then we could end up in a situation where oil supply falls faster than demand, at least for a period of time, and this could undermine price stability. And that's why, it's important that the transition occurs, but it occurs in such a way that it ensures stability, security, and access to affordable energy, including those of conventional fuels.
Now, let's talk more when we look at, global oil demand, the peak in global oil demand, whenever it happens. But, when that happens, is there a danger that the Gulf region, which, is a key supplier here, might it lose, its status both economically and geopolitically as well?
Well, many are of this view that the Middle East oil exporters will emerge as the definite losers from the energy transition. And this is based on the premise that oil demand will decline, and this will erode the importance of oil and gas as a strategic commodity. Also, in a falling market, according to this view, oil exporters will engage in a fierce competition for market share, and usually this will result in lower margins and revenues. And of course, given the undiversified economic structure of oil exporters and the rigidity of their spending, this will result in economic disruptions and instability. But I would argue that this type of analysis is quite simplistic for a number of reasons, because MENA oil exporters are not a homogeneous group, and their resilience and core sources of competitive advantage vary tremendously. Take, for instance, the major oil and gas producers of the Gulf countries. These countries have some core competitive advantages in a way which would allow them to adapt better to the challenges associated with transformations of the energy transition. They have a very well developed and highly integrated energy sector. They have a massive reserve base and some of the lowest costs of production in the world. They have very low carbon intensity, low gas flaring, and low methane emission, which would allow them to compete on dimensions other than cost. But even if one looks at clean technologies, the energy transition could offer some of these opportunities, for them to adapt. There's abundant renewable potential, hydrogen potential, and all of these basically can be developed within certain frameworks, such as the circular carbon economy. And one final point on this is that some key oil exporters are not standing still, and they are evolving and responding to the challenges that the energy transition may bring. So to me, the issue is not about a winner being a winner or losers, but the ability to adapt and increase resilience. And some oil exporters could maintain competitiveness both in the traditional and new forms of energy. But of course, to achieve this goal, this requires vision, serious reforms, innovation, and investing in increasing the resilience of the energy sector. I think a major shift has been a recognition by the key oil exporters of the challenge, and most importantly, that they want to be part of the solution.
Oh, and I think, yes, in this region, in the Gulf region, I think we are hearing, very strong leadership and very strong narrative coming from the key players here that they do want to be part of the solution without a doubt. They're not going to be left behind. But if you were to, I suppose, advise them in terms of, adaptation strategies, what would you say the Gulf producers could do to really, continue to deal with this challenge of the energy transition?
Well, the most obvious adaptation strategy is, of course, diversifying away from the energy sector. But despite the fact that many countries, many oil exporters have been trying to do so, they have failed to achieve real diversification, and particularly fiscal diversification. In other words, reducing reliance on oil revenues to finance government spending. And diversification is only successful if you are able to create new sources of income, for instance, by creating new sectors. Also, achieving diversification requires building human capital, improving education systems, as well as extensive reforms to improve the business environment, transparency, and governance. It also needs removing barriers to private sector participation. And fiscal diversification also requires introducing taxes, both direct and indirect, and reforming prices and subsidies. And I would argue that there is uncertainty about how fast or even whether such extensive economic and institutional reforms can be implemented in many oil exporting countries. This is not to say that reforms did not occur. One can point to a number of countries where these reforms have occurred. But this does not imply that the energy sector will be less important part of the economy or play a lesser role in the transition of these economies. To expect the oil exporters to diversify away from the oil and gas sector, which constitute their core competitive advantage, and for this strategic sector to play a lesser role in the transition is not realistic, but it's also suboptimal because oil exporters will be limiting their adaptation strategies by not leveraging on their core strength and their portfolio of assets.
Yeah, so do you see the energy, the hydrocarbon sector then, it has to continue to play, a relevant role during the transition because it's needed more than anything else?
Absolutely. After all, the oil sector remains very profitable and enjoys higher margins than any new sectors that governments aim to establish. Governments also need to leverage on our revenues to ease the pain of reforms on households and firms, for instance, through developing compensation and offsetting mechanisms. Also, the oil sector can contribute to diversification efforts by creating forward and backward linkages in the economy if it's done properly. The one final point is also that the pace of the energy transition is highly uncertain and not linear, and it's likely to be uneven across the globe. And there will be opportunities that these countries could still capture. Exiting too early from oil and gas is costly, the same as exiting too late. And that's why it's important in an uncertain environment to enhance the competitiveness of the oil and gas sector and increase its resilience against potential risk of disruption. At the same time, be prepared to take advantage of potential dislocations that the energy transition could induce. And this implies competing not only in cost, but also on reducing emissions.
And indeed, when you think about it, yes, it's a carbon constrained world, so to speak. Should oil and gas exporters, as you were saying here, what else are they going to compete on in terms of other dimensions than cost?
Absolutely, and cost is definitely one dimension, but they will have to compete on dimension other than cost, and and compete on reducing emissions. And one key aspect of increasing the resilience of the oil and gas sector is to decarbonize oil and gas production to enhance competitiveness, especially in a world where carbon prices are expected to rise. And some oil exporters are well ahead in this regard. For instance, Saudi Arabia benefits from low carbon intensity of production, has invested heavily in capturing gas and lowering gas flaring and reducing methane intensity. Also, the potential to improve the efficiency of the domestic energy use and optimizing it and diversifying the energy mix by increasing, for instance, the share of gas and renewables. The potential is massive. There are also opportunities, for instance, to shift the portfolios towards petrochemicals and non-combustible uses of oil. And what we're likely to see, as I mentioned earlier, is that we're going to see a massive shift in trade flows as a result of refinery closures. And what is likely to see that companies such as ADNOC, Saudi Aramco, they will continue to develop their trading capabilities. And of course, the most difficult part is reducing emission from the final consumption of final petroleum products in order to sustain the demand for this country's core products. But at least the region is coming with some interesting ideas, such as the circular carbon economy approach, CCUS, and that's why I would argue that that the region has its core competitive advantages and can be in a way part of the solution. But let me mention here one point, that there are risks that face this strategy, and the biggest risk to me is whether frameworks could be established so costs are equally shared and certain technologies are not discriminated against, for instance, such as CCUS. And while some countries are pushing for one path for reducing emissions, such as electrification, we should recognize that different countries will pursue different paths depending on their initial conditions and portfolio of assets and their core strengths.
Yes, and indeed, just like the recovery of the economy, I think, yes, that whole energy transition is not going to be, even around the world, and it will move at different times and at a different pace. Let's turn our attention.
Sorry, just to interrupt. And that's why it's important for our exporters to be at the table and be very active in the climate change negotiations. And they need basically to push for an inclusive framework, which in a way is already happening. So that is very, very important to be part of the solution. Rather than just basically
they're headed in the right direction to do that. They have to do that, really, don't they?
Yeah, they have no choice in a way.
Talk to me now about what's been going on with OPEC. It's been a very, very busy sort of 2 years in many ways there, and just looking back, I suppose, in terms of the day that we had horrendously low prices and the recovery that's been there and the management of supply over the last many months?
Well, I would say that the OPEC Plus response has been very effective during this cycle. And this has been reflected in a number of ways. If you look at the high compliance of OPEC Plus, despite the historical size of the agreed cut, and despite excluding from the agreement countries suffering from output disruptions, the ability of producers to reach compromises on output decisions and maintain the cohesion within the group, against most expectations, the relationship between Saudi Arabia and Russia continued to strengthen following the breakup of the OPEC Plus agreement in March 2020. But also holding of the joint ministerial monitoring committee meetings on a monthly basis to monitor the compliance of participating countries. I think this also contributed to the high compliance. If also you look at the introduction of new compensation mechanism for countries to make up for past overproduction, which acted as a tool to put pressure to achieve better compliance. But perhaps more important is that OPEC Plus has shown proactiveness and flexibility by adjusting output policy almost on a monthly basis to respond to the increased short-term uncertainty. I think another feature has been the willingness of Saudi Arabia to act independently and to take additional measures beyond the OPEC Plus agreement by making substantial additional unilateral cuts. And the final point I would like to make is that the ability of OPEC Plus, and particularly Saudi Arabia, to continue to surprise the market with key decisions. I think all of these factors point to a much more flexible and more effective OPEC Plus in dealing with the adverse shock of COVID-19, and also in influencing market expectations and shaping sentiment.
Yes, I think they're very proud of, I think, what's been achieved. And when you think of their ability to, as His Highness mentions time and time again, to be able to tweak the situation and tweak their response and do what they need to do very quickly. And I think they've proven that. But looking at a longer term, just before we finish up, because OPEC is very important when we're looking at supply globally as well. Do you think that cooperation between producing countries will continue, and particularly when we look at output policy in terms of the OPEC Plus umbrella?
I think this is an excellent question, and one has to look at it short term and long term. Reaching agreements and maintaining cohesion within a bigger group of producers is always challenging. And the recent experience shows that that producers were able to cooperate together to deal with the COVID-19 shock. As I mentioned before, cohesion has been strong, compliance has been high, and producers have been able to reach compromises. And what unites OPEC Plus is the belief that through cooperation, countries could smoothen and obtain higher revenues compared to a situation where every producer maximizes production and competes for market share. However, since we're talking about the energy transition, and as the energy transition accelerates, divergence will widen between producers. And I think this is due to initial conditions. There's a huge difference in terms of the level of development of the energy sector, the size and the quality of resources, the level of sophistication of oil exporting economies, better access to technologies. But also in terms of policies, some countries are pursuing much more ambitious policies. Therefore, I believe there will be a group of countries that would be able to achieve better outcome in terms of economic diversification and in increasing the resilience of their energy sector. And there will be another group whose diversification will go very slowly and their energy sector will fall behind in terms of efficiency and reducing emissions. And to me, a key question is whether the current framework can ensure that cooperation continues if the transition accelerates and the diversion becomes too wide. And if the answer is no, can producers broaden the scope of cooperation? Is cooperation on decarbonizing technologies one way forward, for instance? I have no answer to these questions, but the recent announcement of the Net Zero Producer Forum, in which Saudi Arabia and Qatar are members, is a very encouraging step, and let's hope that other producers will join eventually.
Without a doubt, I think yes. And having followed the energy industry for so many years, it's very clear the narrative. I think has definitely changed, and there is, I think, that political will and that collective will too, as you talk about, to make sure that the oil companies and indeed the producers, be they national or international, are very much part of the solution. Bassam, thank you so much. Just wrapping this up, it's a very dynamic time, I think, in the industry. So without a doubt, it must be a lively time for you too at the Oxford Institute for Energy. So lots of work going on, and well done. So I just want to thank you for taking the time to be with us.
Thank you for